numbers. So we're seeing US oil break down. As we might have anticipated, the descending triangle looks like it's confirmed. I would anticipate that US oil come back up, um, retest 64, 65, and then head lower. So we're waiting on the retest of 65 before taking any position, and then I think we'll probably see $40 oil coming up um, pretty soon. Let's head over to SPY. So SPY is working out as we kind of said. We didn't go through too much of a consolidation phase. There's only a small consolidation phase, and then we spiked lower. We're hitting 515. Could we hit 505 perhaps, or 500? That is in the cards, but I think in the short run, the market is oversold at this point. I'd expect some kind of news to come out maybe Monday or next week or the week coming in the coming weeks that'll bring us straight back up to the moving average. So if we go and look at SPY, let's look at SPY real quick. We'll see we have an impending death cross. Now, when that death cross happens, it usually pops right in the days after that death cross happens. So we see the cross here. It fell down, okay. So maybe we have a little bit to the downside, like I said, 505 or 500. So 2% maybe to the downside before we'll see a short-term bump. And then if we see the short-term bump, that's going to be a great place to get out of the market and reposition for whatever you need to reposition for. So I think we're about 2% away from the short-term bottom in the market, and then we'll have this kind of vicious rally coming up soon. So that's just my take on what's happening today. It's the same thing in the Qs. Usually Qs go down slightly faster than SPY, but it's exactly the same chart. We're seeing from 540 to the bottom is about 80 points, and then from here down to the bottom should be about 80. So we might have, like I said, there could be another 2% or so downside in the short run. But I think most of the downside in the short run is already calculated into whatever happens so far. So I'd expect some kind of relief rally coming in the next week or two. So if you can hold in there for next week or two, I think we'll probably have a relief rally. So yeah, if we look at other stocks that are being obliterated, was RH. I said that maybe we have a target here of 80 on RH. It's not touchable at this point in time because it broke the trend line. So we see that it broke this trend line from here to here. So yeah, I would stay far away from RH for now. There's no reason to hold this as of now. Nike, same thing. We said is bear trend, to stay away. It broke a long-term trend. It retested here and then broke lower. So like I said, Nike could be investable around 25 or 30 bucks a share. So about 50% lower from where it is today. We've been in a bear market in Nike since 2021. Nobody's really recognized that it's a bear market. Nobody's talking about it, but I talk about it here in this channel, that the consumers are under pressure and have been under pressure since 2021. Same thing in VFC Corp. We see impending bear cross. I would stay away from this. Maybe an $8 target in the short run, but stay away from VFC Corp. Looks like we might be getting a bottom in farm. So we saw a trade down to 180. That got bought up. Now we're at 193. So I think if you caught that 180 bottom, you were very fortunate in farm. So yeah, putting money to work in farm might be a good idea, but I would like to see this trend kind of reverse a little bit more before putting money to work, more money to work in farm. Hain is another one we talk about, down 2%. It's bottoming. This has been in a bottoming process for the past few months. I think it has a little bit downside to go, but not a whole heap of a lot of downside to go in Hain, because I believe that something's going to fundamentally change, and we're going to see food stocks rise again because they're usually the safest ones. We're seeing Allstate down 5%. Yeah, so it looks like a double top happening, and we have bearish cross in MACD. We do have some distribution happening, but not a whole lot compared to some of these stocks like that are focused in China, like Apple, for example. Apple, I think that 176 will get filled in Apple. I think that Apple looks very bearish right now, but it did hold this trend line, which makes me think that we're going to get a rally here in the coming week or two, because it held that recent low here around 190-ish. I think we'll get a bounce, maybe back up, fill this gap at 218 or so, and then roll over in a big way to fill that gap. We do have an unfilled gap in Apple at 98. So it's about 50% lower from where we are today. So I could see that gap being filled once and only if this trend line breaks. So if we see that trend line break, I think we'll have a volatile situation in Apple, and it'll come back down, which doesn't bode well for the overall market as well. So we're looking at several things here. GLD, we're seeing GLD sell off 2%. Yeah. So as expected, GLD was overbought and is still overbought. This will come back down as we see Apple and stuff implode in the coming months / year, back down to 192 area, 195 maybe. So just watching the GLD. I have no position in that. T-bill and chill is working quite well. If you're looking at TLT, that's up a little bit today, 1%. So it looks like TLT is entering a bullish phase, as is TMF. So watching these two, they're on my radar quite a lot. So if I look at these two stocks, I see one is an ETFs actually. They're still in a downtrend. I would like to see a break out of that downtrend. So once we have a clear indication that it's breaking out of the downtrend, then it looks like we might want to go in there and scoop them up. So unless you just have a longer time horizon. So it looks like most of the downside is done for today. We might go a little lower, but I think for the short run, we have seen the lows. So I believe that this is a buyable dip. I believe that we will see a bounce coming up. So we'll see this low get tested. Looks like it might have been tested a little bit here, right here at 508, 510, and then I think we'll come back up and back to 50-day and 200-day, retest this, and then see if it holds. If it doesn't hold, we are heading straight down to 420. So on the SPY, which is about 20% sell-off from where we are now, and it would represent roughly a 30% sell-off from the all-time high, which is not unheard of because we've seen that before in 2022. We've seen a 20+% decline in the market. So I think it's completely reasonable to expect it going back to 420 in the coming, let's say, year at some point. Okay, it's not a straight line. It'll come back down when it comes back down. So that's kind of what we're seeing in the SPY so far. Like, subscribe, and comment. Thank you all for watching, and let the market be with you as always. Take care now.